ริ่มได้เลยครับ
ค่ะสวัสดีค่ะผู้เข้าร่วมสัมมนาทุกท่านคะได้เวลาของการนำเสนอข้อมูลของบริษัท PSL Shipping จำกัดมหาชนหรือ PSL นะคะสำหรับผลการดำเนินงานประจำปี 2022 นี้โดยคุณคาลิดฮาชิมจะนำเสนอข้อมูลอัปเดตในเรื่องของภาพรวมของอุตสาหกรรมและตามด้วยคุณกอตัมกูรณากรรมการทางด้านการเงินในเรื่องของตัวเลขทางการเงินแล้วก็ผลการดำเนินงานและในช่วงสุดท้ายในส่วนของคำถามคำตอบถ้าท่านใดมีคำถามก็สามารถที่จะคีย์เข้ามาในแชทบ็อกซ์ของ Set Off ได้เลยนะคะค่ะได้เวลาแล้วขอเชิญคุณคาลิดฮาชิมค่ะ
สวัสดีครับ As usual, we will break up the presentation into two parts. In the first part, we will discuss the industry structure, and in the second part, we will be focusing on the company and its numbers. So if you look at the first slide, we show you how the market has performed since the start of January 2016 all the way up to January 2023. So we look at the next slide, you can see that China, which is the single largest player in the dry bulk market, on every possible metric that you find there, whether it's iron ore imports down by 1.6%, whether it's coal imports down by 9.4%, whether it's steel production, which is down by 1.8%, whether steel imports down by 26.3%, steel exports was up just by 0.9%, and steel consumption was down by 2.2%. So China fared very badly. And yet in 2022, if you look at Precious Shipping's results, we had a better year than in 2021. We were $2 million of higher profit this year, or 2022 compared to 2021. So if you look at the next slide, this slide shows you how demand has been changing. So if you look at the year 2017 and look at the sixth row from the top, you can see that demand has slowed down from 5.09% to 2.41% to 0.39 to 0.64, then jumped up to 3.63 in 2021, and then dropped to a minus 1.25% in 2022, and then is shown as a 1.59% plus number for 2023. If you look at the last row of the top half of the slide, you can see that what was the change in terms of net addition in supply. So it's roughly about between 3 and 4%. But when you come to 2021, it's at 3.55. In 2022, it drops to 2.86. And for 2023, it's estimated at 2.4%. If you look at the next slide, which looks at the minor bulk, in the minor bulk, you can see demand was fluctuating between 6.5% or 6.25% in 2017, down to a minus 0.5% in 2020. And then in 2021 was at a high of 5.42%. And then in 2022, minus 1.28%. 2023 is forecast at 0.47%. If you look at the change in the supply of net supply of ships, you can see that it's been varying between 2.5% and 3%. In 2021, it was around 2.45%. In 2022, it's estimated at 3.22%. And in 2023, it's estimated at 1.3%. If you then go to the next slide, you can see the type of cargoes that we carry. So amongst the cargoes that we carry, on the major bulk front, there are two cargoes that we carry. We carry some amount of grain. It's shown under agri products. And then we also carry coal. So these are two major bulk cargoes. All the other cargoes that we carry are classified as minor bulk cargoes. If you come to the next slide, you will see how each type of ship spends its time on carrying what type of cargo. So if you look at Capesizes, they spend 74% of their time carrying iron ore, 19% of the time carrying coal, and 7% of the time they carry what is known as bauxite. But this bauxite is from the country of Guinea all the way straight back to China, where in Guinea the mines that are producing bauxite are owned and controlled by the Chinese. the rail line from the mines to the port is also owned and controlled by the Chinese. And then at the port itself, the loading process is also controlled by the Chinese. So this is like a captive trade for China, and it sort of reduces its dependence on 2 or 3 countries which otherwise supplied all the bauxite and alumina that it needs. If you come to Panamaxes, you can see 8% in iron ore, 52% in coal, 25% in grain, and 15% in minor bulk. But when you come to Supras and Handies, you see that minor bulk is at 54% for Supras and 66% for Handies. So it shows you quite clearly that the smaller sizes are much more dependent on minor bulk cargoes. If you then come to the next slide, you will see that the total fleet growth in 2022 was 27 million deadweight tons, which is the last row and the last column on the lower portion of the slide. And if you examine the rest of those entries on that same last column in the lower half of the slide, you would see that the Handysize and Supras added in roughly 10.5 million deadweight tons of ships. Whilst if you look at the Panamaxes and the Supras, Panamaxes and the Capes, they added something like 16.25% of 16.25 million deadweight tons of ships. So quite clearly, they're adding more ships than we are adding in deadweight ton terms. If you go to the next slide, here you see the total forward order book, and that is at 7.16% or 69.14 million deadweight tons. If you go to the next slide, we will see what happened to real growth, net growth in 2022, which is on the left-hand side of the chart. And on the right-hand side, you can see what we expect for this year. So on the left-hand side, you can see that slippage for the first time ever was a negative number. That means 8.15% or more ships were delivered than were projected for delivery during 2022, and scrapping was at 4.76 million deadweight tons. If you come to 2023 and the estimation that we made, we've assumed slippage at 5%. We've also assumed scrapping at 8 million deadweight tons. But the more we read from the reports that are available in the shipping press, we find that scrapping for 2023, because of the regulatory pressure, should be double this number of 8 million, according to Clarkson's, should be closer to 16 million deadweight tons. So if that is the case, then the total change will be lower than 2.75% as projected by us. If we then come to the next slide, here we show you what's been happening on a historical basis on 3 numbers. One is, of course, the forward order book at the start of any year. That is the line which has got the circle on the top of the peak of it at 78.14%. This was at the start of 2009. The next line lower than that is the 20-year-old fleet. And you can see clearly that the forward order book, at least since 2003, all the way to 2021 end or 2022, has always been lower than the forward order book. And then at the right at the bottom, that line shows you the net increase in supply. So you can see clearly that in 2009, we had a very high forward order book. And right now in 2022, or the end of 2022, start of 2023, the forward order book is at just 7.16%. Against that, the total 20-year-olds in the fleet right now, as of today, at the start of this year, was 8.1%. So if we come to the next slide, we can see the same thing for the Handysize and the Supras. And here you can see it is much more magnified. Here you can see the forward order book is at 3.64% for the Handies against a 15% 20-year-old fleet today. If you go to the Supras, you can see that the forward order book is at 9.5%. Against that, the 20-year-old today are at 11%. So again, it appears that there will be just replacement of older ships taking place in this sector and no additional growth. Come to the next slide. Now, this slide, I want to spend a little bit of time to explain to you what it means. Now, what we have done is we've grouped 4 time periods for you. 2003 to 2009 as one-time period when the markets were very, very high, 2010 to 2020 when markets were very, very low, and then 2021 and 2022 to show you what is happening now. Now, if you look at the fifth row from the top, it shows you how much demand was growing in ton-mile terms per year at the start of each of these years. So you can see that during the period of 2003 and 9, on an average for those years, demand was growing at 5.4%. And then in the 2010 to 2020 period, you can see it has dropped down to 4.2% on an average per year. And when you come to 2021, it has dropped further to 3.632. Clarksons are estimating at this stage that the growth last year was minus 1.25%. If you then look at the row immediately below that, it tells you what has been the average speed of ships during those years. So on an average, the speed during 2003 to 2009 was 13.5 knots. During 2010 to 2020, it dropped by 2 knots to 11.5%. Now, 2-knot drop is like effectively removing 11-12% of the existing fleet. Similarly, you can see in 2021, it dropped from 11.5 to 11.4, and then in 2022 to 11.2. So a declining speed, which means reduction in effective supply of ships. And then if you come to the third row from the bottom, it shows you what has been the order book to fleet ratio per year at the start of each of these years during these periods of time. And you can see that it was 36% in 2003 to 2009. It dropped down to 26% in 2010 to 2020, and then to 7% in 2021, and now finally to below 7% at 6.88% at the start of 2022. And if you come to the start of 2023, it was at 7.16%. Now, if you look at the next row from the bottom, that is the second last row, you can see what was the average 20-year-olds at the start of each of the years in these different time periods. And you can see that in the 2003 to 2009 period, the order book was 2 times the average age of 20-year-old ships. Then if you come to 2010 to 2020, it is now 1.5 times what it was. And then when you come to 2021, it is just more than 1 time. And when you come to 2022, finally, you find that it is below 1. And in 2023, again, it stays below 1. This tells us that the forward supply of ships is going to be weak. And finally, the last row from the bottom tells you what was the net change in supply during each of these years of each of these periods of time. So it was growing. The net effective supply was growing by 6.8% in the 2003 to 2009 period, went down to 6.4% in 2010 to 2020, then dropped to 3.5% in 2021, and then to 2.86% in 2022. And as I said, in 2023, that is the start of 2023, you can see clearly that the forward order book is at 7.16% versus an 8.1% 20-year-old fleet in the existing at the start of 2023. So if you come to the next slide, we can see what were the real changes between 2021 and 2022, and what do we expect in the future. So in 2021, what happened? First of all, supply and demand balance was reached in this year. And upward momentum in freight rates started out from the middle of 2020 and continued during 2021, with the speed of change in the freight rates taking everyone by surprise in the market. China's GDP growth rates and the rest of the world growth rates during 2021 were very strong because of all the stimulus. Congestion peaked in Q4 of 2021 at 34.8% above the 7-day moving average during the 2016 to 19 period, and averaged 33.2% at that year. Of course, during that year, Evergrande became infamous, and China refused to bail out these bad developers of real estate. China also put a lot of limits on their industries and increased coal production and coal imports at the same time. They also capped coal prices, they relaxed emission rules, they increased power for residences, but reduced it for industries, thereby slowing down the GDP of China during the last quarter of 2021. What happened during 2022 and beyond? First of all, in 2022, inflation became public enemy number one in the rest of the world. To fight inflation, the rest of the world central banks tapered QE and increased interest rates dramatically. Only China, Russia, and Japan went against this trend by, first of all, continuing with QE, and secondly, for not raising interest rates. As a result, what happened? Congestion dropped to 33.1% in 2022, and lower dry bulk rates were seen during Q4 2022 and Q1 23. However, these negatives are by government intervention, but not a collapse of demand, so can be reversed. China's real estate crisis needs some more time to resolve, but the economic stimulus that China has put into the economy will make sure that the second half of 2023 does very well indeed. We can then come to the next slide. Here you can see the average speed. So you can see that during the period 2012 to 2020, the average speed was very similar to 2021. But when you come to 2022, you can see that average speeds have dropped quite sharply. And it's the same whether it's the Capesize sector, the Panamax sector, the Supra sector, or the Handysize sector. Then if we come to the next slide, here we show you congestion levels. And what you notice is that between 2016, which was the lowest freight market that we have ever seen in our lives, if you look at 2016 to say 2020, the average congestion would be about 30%. And if you look at 2021, it is at 33%, so roughly about 10% more. And in 2022, similar levels of about 33%. If you come to the next slide, you can see the reasons why ordering has not taken off and skyrocketed as it usually does when rates are very strong for 2 consecutive years in shipping. So if you look at the dry bulk averages for 2022, it was 1934 points. And if you compare that with 2021, you can see it was down by 34%. But if you compare it with 2020, it was up by 81%. And if you compare it with 2019, it was up by 43%. However, if you look at the ships ordered during 2022 at 31.64 million deadweight tons and compare that with 2021, it was minus 16%. And it was minus 35% compared to 2020 and minus 22% compared to 2019. So you can see that there is a declining trend in the ordering of ships as each year is passing by. Now, there are 3 main reasons why this has happened. The first one is, of course, because dry bulk owners have been crowded out. And we have not got any berth space at all because containers, tankers, gas carriers, and car carriers have booked all the available slots in the shipyards. Second factor is, of course, that shipyard capacity has come down by 40% compared to the peak. And thirdly, and most importantly, despite dry bulk owners having a lot of cash in their pockets, current legislation and expected regulations that will expedite the death of the internal combustion fuel oil burning ships and the fear that such ships will become stranded assets is making sure that the forward order book remains very, very low. And we then come to the next slide. You can see as a final industry takeaway slide that there was good news in 2021 with supply-demand balance being reached during that year. China's stimulus pushed the market up to 5650 points, a 13-year high on the 7th of October. There was material improvement in rates from the second half of 2020, and BDI reacted positively to the world GDP growth rates, strong world GDP growth rates in 2021. Now, the bad news in 2021 was that rates declined after peaking in Q4 2021 due to negative news from China and negative news from the rest of the world. I've already explained both of that to you in detail. 2022 and the likely future, congestion dropped marginally in 2022 to 33.1%, yet very good results and rates were exhibited by most ship owners in 2022. They are not caused by a collapse in demand and so can be reversed. Time charter rates for geared ships during 2022 are higher than the average rates in 2010 to 2020. New ships ordered during 2022 have been very constrained, and China's real estate crisis requires a bit more time to resolve. However, China's economic stimulus should make the second half of 2023 onwards start to go up very sharply again. So we come to the next slide. We can then look what are the catalysts to look out for. So what are the catalysts to look out for? First of all, you can see that the 22 million tons of grain lying in silos at the Ukrainian ports have more or less been shipped out already. Now, then comes the harvesting of the grain which was on the field. And of that, I can tell you clearly that 52 million deadweight tons has already been harvested. And cargoes, but unfortunately, other cargoes from Russia and Ukraine in the Black Sea are not moving except for grain. China's coal consumption and power generation continues to rise. This has happened, so this is a good thing to see. But China's real estate sector has not yet recovered. And China's GDP growth rate is expected to rise sharply this year. So we have to see how that goes. China, luckily, does not have large-scale COVID infections. Hospitalization rates have dropped by 98% from the peak. So this is good news. It tells us that China is going to be open for business starting out in the end of the first quarter and in the second quarter onwards. Congestion at ports around the world. Again, we're starting to see more congestion. There are right now currently more than 100 ships waiting in Brazil to load grain cargoes. The problem is with the iron ore movement from Brazil. It's not yet started because of exceptionally wet weather during the month of January. Now, increase in interest rates in the rest of the world has already slowed down, and USA has halved their last interest rate hike. So this is again good news. So amongst the catalysts, most of them are turning positive. Come to the next slide. So come to the regulations. Now, we've been asked so many questions of this EEXI. So just look at bullet point 4. I think it explains it quite well. Out of our fleet of 38 ships, and remember, we are about 2 to 3 years younger than the average age in the world fleet, 23 vessels in our fleet will need some sort of countermeasure, including engine power limitation, to comply with EEXI. So out of these 23 ships, 16 ships have to have what is known as an EPL, or an engine power limit, which will reduce their speed between 1 knot and 2.5 knots on each ship compared to the same ship's speed during 2021. Now, this will cost us about $1 million, as I've explained in bullet point 5. And in bullet point 6, I tell you what are the implications for the effective supply of ships. Every 1 knot speed reduction in the world fleet equates to 5.5% reduction in the effective supply of ships, assuming the ships stay at sea for only 200 days. If we come to the next slide, it shows you what's happening with CII. It also starts in 1st of January 2023 and will increase, rather the carbon intensity of ships must reduce every year by 2% each year, starting out in 2023 and ending in 2026. And how many ships will be affected? About 30,000 ships, because this rule only applies to ships that are about 20,000 deadweight or more. And how will PSL control CII of their fleet? By optimizing operations and ensuring our vessels are in very good condition. If you come to the next slide, it shows you what DNV have looked at. They've tried to compare the fleet in the world. So they've done a breakdown of the ships in the 4 sectors, and they have then compared that with the same sectors where the ships are greater than 10 years of age. Now, why have they done that? Is because about 10 years ago, electronic engines started to come into play, and these are associated with eco ships or ships that burn very low oil because they have electronic engines. All engines prior to 2013 were built along with mechanical features and not with electronic features, and therefore they are not that good in slowing down the consumption of oil. So you can see that that's 55% of the existing fleet. And then if you look at the new buildings or the entire forward order book, you can see that that is just 7%. So you've got 55% of the world fleet that will not be able to comply. You'll have 7% of new ships that will become super compliant. That will mean that overall you'll have about 62%, which is on the lower slide. If you look at D and E, they are the non-performing ships under CII. And if you measure and if you add up the two last columns in D and E, it shows you by 2026 that 62% of the world fleet will not be able to comply with this law. So it seems that this law, where there are no penalties involved, is not going to be really enforceable because of the fact that so many ships would not be in compliance. We come to the next slide. We will look at our strategy, and that the first slide shows you how many ships are there in our fleet, 38, and that the average age is 11 years, and that the average deadweight per ship is 44,000. If you come to the next slide, it shows you what is our forward, how did we fare in market segmentation terms, and you can see that on the handy-size sector, where our ships are roughly 20% or 25% smaller than the average index ship, we fared 18% below the index ship. And if you look at the Supramax index, then you can see that we outperformed the index by about 3%. Keep in mind that our ships on the handy size are discounted by about 25% to bring them to a same level, performance level as the index ship. And similarly, on the Supramax side, about a 10% allowance needs to be given to our ships to make them equivalent to the index ships. If we come to the next slide, it shows you our forward order book. So if you look at 2022 as an example, 19,858 was the average time charter rate for all our contracts that we had, which were about 1 year or longer. That was done for 5,394 days, or 40% of the available days of 13,501 days. And if you look at the row on the top, it tells you what was the revenue that we got from those long-term contracts, $107 million. If you then come to 2023, you can see that that rate from 19,858 has dropped to 11,752. But the percentage has gone up slightly. Number of days has gone up slightly. The percentage has dropped slightly because we've added 2 ships during the year in 2023. And then if you look at 2024, 2025, and 2026, you have a steady rate of about $15,000 odd because that consists of the 5 long-term chartered ships, 4 cement carriers and 1 Supramax ship. So this tells you what we are doing. We are trying to fix our ships on a relatively shorter period of time because we expect market will be very volatile. And whenever the volatility leads to higher rates, we will start fixing ships for 1 year or longer. And whenever it comes down to the lower rates, we will try to keep the ships on index-linked charters and wait for the markets to go up. So with that, I think we have come to the end of the industry structure slides. And after this, Gautam will take you through the financials.
Okay, so the highlights of the year, our net profit for the year was baht 4,850 million, or USD 138.6 million, or baht 3.11 per share. Our EBITDA for the year came in at 6,320 million, or USD 180.33 million. We've declared 3 interim dividends in 2022. Financing, we signed 1 new loan agreement with Bangkok Bank Singapore branch for 17.1 million. We acquired 2 ships, 2 handy-sized vessels, Patra Nari and Pavida Nari, in June and July. And during the year, several of our ships were entered into long-term charters that were linked to the underlying index for that size of ship. So Q4 highlights for the quarter, our net profit came in at about 549 million or USD 15.26 million or about 0.35 per share. EBITDA came in at 1,003 million or USD 27.89 million. We paid an interim dividend on 9th of December. In October of last year, 6 of our vessels entered into long-term charter contracts that were linked to the underlying index for vessels of that size. And in December, further 2 ships were entered into long-term index-linked charters. So some key figures. So for the full year, our revenues in 2022 came in at USD 260.5 million compared to 272 million in 2021. Net profit for the year 2022 was slightly higher than 2021. It came in at 138.6 million compared to 137 million in 2021. The earnings per share figure was also slightly higher at 3.11 per share compared to 2.87 per share in 2021. Our net debt to equity ratio continued to decline. It came down to 0.34 compared to 0.4 in 2021. And the number of ships on our fleet increased from 36 to 38. So if we look at this on a quarterly basis for Q4, the revenue for the quarter came in at $46.5 million compared to $68.8 million in Q3. Net profit came in at 15.3 million compared to 36.4 million in Q3. Earnings per share came in at 0.35 baht compared to 0.86 in Q3. So this over here shows you the earnings and liquidity over from Q1 of 2020. So the top left graph shows you the average time charter rate per day per ship that we own. So you'll see that back in Q1 of 2020, when we were going through COVID, rates were quite low, and then there was an increase in rates, and thereafter rates have declined. So in the fourth quarter 2022, the average rates in our fleet came in at 14,343. Our EBITDA, of course, follows a similar trajectory. We've been paying out consistent dividends, quarterly dividends, as you can see in the lower left graph. Our cash balance continues to be quite healthy. So this is the statement of financial position. So you'll see that the shareholders' equity increased from 430 million to 476 million this year. Total assets increased from 607 million to 638 million, primarily because of the 2 new ships that we acquired in the year. Our debt decreased from, this is long-term debt, decreased from 246 million to 194 million. This shows you the cash movement throughout the year in 2022. So we started out the year with 74 million of cash on our balance sheet. We generated 188 million of cash from operations. Our capex for the year was 68 million, most of that comprising the capex incurred to acquire the 2 new Handysizes. Interest payments for the year came in at 10 million. We drew down one loan that was 17 million. Our debt repayments came in at 69 million. We paid 101 million of dividends, and we ended the year with 31 million of cash. For the quarter, 39 million was our cash balance at the end of September in 2022. Our cash flow from operations stood at 37 million, capex at 8 million, interest payments 3 million, debt repayments 13 million, dividend payments at 21 million, and we entered the quarter at 31 million. So this shows you the operating expenses, the breakdown of the operating expenses over time. So in 2021, our operating expenses were somewhat more elevated, primarily because of higher stores and spares expenses. This was related to higher air freight costs. Air freight was very expensive in 2021. Our ships are trading around the world. We have to freight spares. and stores sometimes on an urgent basis, and the cost of that was quite elevated, so that's getting reflected over there. Dry dock and special survey expenses in 2022 were also somewhat lower. Management expenses were lower. Insurance was slightly higher, and lube oils was also slightly higher. But overall, we are lower in 2022 compared to 2021 as the costs are getting more normalized in a post-COVID world. This looks at the operating expenses, quarter 3 2022 and quarter 4 2022. So a similar picture. The operating expenses in Q4 have declined slightly in Q4 compared to Q3. This over here, we compare our operating expenses to the industry average for ships of similar size, being handy-size and handy-max ships. So according to the latest report published by a company called BDO, our operating expenses are about $400, $450 per day lower than the industry average. Now, every $100 in savings translates to about $1 million on the bottom line. This over here, we are showing you the an analysis of our operating expenses compared to several of our listed peers who are also in the Supramax and Ultramax sector globally. So you'll see that we are among the lowest when it comes to operating expenses. But if you look at the line below, it shows you the EBITDA per ship. Now, we're showing you the EBITDA per ship both in Q3 of 2022 as well as the last 12 months EBITDA per ship. And you'll see that on both of those counts, we are actually ahead of our peers. It shows you our debt maturity profile. You'll see that we have a fairly stable debt maturity profile, not very much in terms of debt maturities coming up over the next few years. It's quite evenly spread out. It shows you our net debt and net debt to equity ratio. So you'll see that our net debt to equity ratio continues to decline considerably. So the net debt figure is now only 163 million compared to 412 million in 2017. And the net debt to equity ratio is a very healthy 0.3. It shows you the average OPEX and DC rates over time. So from the year 2000 until today. So we've been through several cycles. So starting from 2000, then you had China joining the WTO. There was a boom following that, but then there were a number of ships that were ordered by owners. The order book reached almost 80%, and that supply was delivered between 2008. Those new ships were delivered from 2008 to about 2016, 17, and that caused rates to decline, as we are seeing. And the bottom was around 2016, and thereafter, supply demand has been more or less in balance, and therefore you've seen rates increasing. You'll see that also the average size of our fleet, which is the red line, the average size of our fleet, average size of ships in our fleet has increased. It used to be 22,000 deadweight, and now it's 43,000 deadweight. And the lowermost line is for operating expenses. You'll see that our operating expenses have been fairly stable over time. We've been, our policy is to pay not less than 25% of net profit as dividends, and this shows our dividend history. During the downturn, we stopped paying dividends, but we reinstated in 2021. So this is the data, financial highlights, which I've already gone through, and I will leave this for anybody to refer to if they wish. Okay, so last year, or rather in 2021, we were ranked number 10 in the world in terms of overall financial performance among 83 listed shipping companies. And within the dry bulk sector, we were ranked second among 22 listed shipping companies. So this is our ESG footprint. Now I'm mindful that we are running quite late, so I'm going to leave this for people to refer to. Investor relations has been quite active for us. Shareholder return. So we were listed on the Stock Exchange of Thailand in 1993. If you are an investor in our IPO, and held on to your investment, you would have generated a 16.4% compounded annual rate of return on your investment after including dividends, of course. So some final food for thought. We expect demand to grow and supply also to grow but at a fairly low level compared to historical average levels. We are a Thai corporate, but we have practically zero business out of Thailand. And the weaker the Thai baht, the stronger our EPS, as all our income is in US dollars. We're a Thai stock, but since we operate globally, we are completely unconnected with the Thai economy. Part of our Bangkok expenses are in Thai baht and would reduce with the weaker Thai baht. We think that price to book value is not a good measure anymore of our stock price, as asset values have fluctuated significantly since the start of the pandemic. Our debt continues to shrink, which of course should be good news for our shareholders. With that, we open for questions.
So taking the questions that have come from the floor already on the chat. The first question is...
May I lead in Thai first? ค่ะมีคำถามเข้ามานะคะก็คือคำถามแรกก็คือในปี2566บริษัทมีความกังวลในเรื่องใดบ้างค่ะคุณคลิตคะ
Yeah, so for the question is for the year 2023, what concerns does the company have? So if you refer to the slide that we showed you about the catalysts to watch out for, then you would see that on those catalysts, the one thing that has not yet happened is that China has not yet started firing on all cylinders. Other than that, you can see clearly that all other items have taken place. In fact, on item 2, which is here, we've already, the entire harvest has already been taken in. 97% of the harvesting of the area needed to be harvested in Ukraine has already been done. And this was as of the 2nd of February. So it appears from all of the bullet points I've put out for you that our only real concerns are that China's real estate sector has not yet recovered and that China's growth rate is still waiting for the stimulus to kick in. And again, if you read our quarterly newsletter and our annual review, we clearly state that we expect this to happen in the second half of this year. So I'm going to read the second question.
ค่ะในคำถามเมื่อกี้นี่ก็คือให้ท่านrefer ถึงในสไลด์หน้า21นะคะในส่วนของคำถามต่อมาก็คือค่าน้ำมันค่าเงินบาทมีผลกระทบกับบริษัทมากน้อยเพียงไรค่ะ
Okay, so the second question is how much does the cost of fuel and the baht currency affect the company? So first part on the fuel cost is a pass-through to our clients. It's not our cost, and therefore there is no real impact up or down. Secondly, coming to the baht, as Gautam has already explained in the presentation, the weaker the Thai baht, the better our earnings per share. We have very little expenses in Thai baht. They will also weaken with the weaker Thai baht. And we have no real business dealings within Thailand. So if you are a foreign investor, you need to invest in Thai stocks, yet you don't like the Thai economy, then you can invest in pressure shipping because it's a stock that is unconnected with the Thai market. Therefore, we are not affected by the weakening of the Thai baht, except that our EPS goes up. Next question, Song.
ค่ะในเรื่องของค่าน้ำมันก็คือบริษัทไม่ได้รับผิดชอบในเรื่องของค่าน้ำมันลูกค้าเป็นผู้รับผิดชอบในเรื่องของค่าน้ำมันนะคะส่วนค่าเงินบาทนี่ก็คือถ้าเกิดว่าบาทอ่อนก็จะมีผลดีต่อบริษัทเพราะบริษัทเป็น US Dollar Company นะคะในส่วนของคำถามต่อมาก็คือบริษัทมองภาพรวมในปีนี้อย่างไรบ้างค่ะ the third question.
How does the company see the overall picture for this year? I think we have spelled this out very clearly in our newsletter and our annual review, as well as in this presentation, where we say that we expect the second half of 2023 to be able to start going up in a very sharp way. So that's what we have for the picture for 2023.
ค่ะ ก็คือในส่วนของคำถามที่3ก็คือมองในช่วงหลังของปีน่าจะมีการปรับตัวเพิ่มขึ้นอย่างรวดเร็วส่วนคำถามที่ส่งเข้ามาจะมีเพียงเท่านี้ค่ะแล้วก็รู้สึกว่าจะเหลือเวลาอีกไหมคะอ๋อค่ะเวลาหมดลงเวลาของบริษัทที่จะนำเสนอข้อมูลก็ได้หมดลงแล้วค่ะคุณคาริตคะ The time is up ค่ะ
Thank you very much for joining the call and we wish you สวัสดีครับ
ขอบคุณทุกท่านค่ะสวัสดีค่ะ